Hi everyone, thanks for joining me again to the Financial Management for Small Business course. I'm really looking forward to sharing with you today. You know, it's important we know and understand our obligations we have as business owners to pay taxes, to lodge our activity statements and tax returns in a timely manner. And the Australian taxation system is one of the most complex in the world, and we need professional help and guidance to ensure we're doing the right thing and keeping up with our obligations. So in this session, I'm going to explain to you the obligations you have as a business owner and an Australian taxpayer, namely GST, income tax, the PAYG system, BAS and IAS. And what do all these acronyms and things mean, and how do they apply to your small business? So let's jump straight in. This is just a disclaimer that the information provided in this presentation is general in nature only and does not constitute personal financial advice. So in our previous session, we talked about choosing the right entity and whether you should set up as a sole trader, a partnership, a company, or a trust. And once you have decided on this and you've talked to your accountant or your lawyer and for the advice, and they've set the wheels in motion on this for you, you now need to ensure that you have all the right government registrations in place to ensure that you meet your obligations. And we need to be mindful that ignorance is not a defence as far as the tax and other government departments are concerned. And if you miss something, if you don't lodge or you don't pay your obligations by their due dates, you can be fined and penalised. So we've really got to ensure that we're kind of like on top of this. So I'm not sure if you know, but there are at least 125 taxes in Australia. So it's really important as business owner to be abreast of the ones that relate to you and to your business. And it's worth noting that 90% of the tax revenue that is collected it comes down to just 10 taxes. And that includes the 3 major state taxes of stamp duty, payroll tax and land tax. But those are a talk for another time. So today I'm going to cover off on the 3 major taxes that may affect you, the 2 major taxes that may affect you in your business, and that's namely GST and income tax. So let's jump straight into GST. Most of us would have heard of GST, or Goods and Services Tax in Australia. This country introduced GST on the 1st of July 2000, and it has been enforced ever since. Canada, Vietnam, Singapore, the UK, Monaco, Spain, Italy, Nigeria, Brazil, South Korea and India also have a type of goods and services tax, but the percentages are quite varied. So in Australia, ours is currently 10%. But is not a blanket tax on all goods and services, as some do not attract GST, such as healthcare services and fresh food. But today we're just going to be covering off on how GST applies generally to a business that is registered for GST and that must charge it. So GST is calculated as 1/11 of the total cost of a product or service that you are selling. So if you provide a client with an invoice for $1,100, a sale, then the GST on that is $100. It's 1/11 of the total charge. And likewise, if you are making a business purchase of, let's say it's a computer and it's $2,200, the cost is, the GST component of that is $200, and that's what we can claim back from the tax department. So if we just bear in mind those principles, that's what we're going to base the rest of this talk on with the GST. So now we've set up our business, we've registered our entity for GST, we must now report to the tax department what we collect and what we pay out in GST. And so how do we do that? Well, I'm glad you asked. So as you can see here on the screen, and you probably can't read all of those things on there, this is a sample copy of a paper business activity statement, or as it's affectionately known, a BAS. These days, a lot of this has gone online and gone digital, but these are still around, these orange forms. Most people do lodge electronically, however, but for this purpose, it's just an example of an activity statement. So this is where we record all of the sales or income we've received in our business and all the related expenses that we've paid out and the GST applicable, as I went through before on those numbers. But there are a number of other items that you may or may not need to report on a BAS, namely income taxes or PAYG withholding for employee taxes, and we'll go through those soon. But the item boxes on the BAS that you need to fill in and be aware of are G1, you may be able to see that, which is a total sales figure for a period of time. BASs can be done on a monthly, a quarterly, or an annual basis. The general rule is most businesses would report on a quarterly basis because annual is probably too long, too big a time frame, and monthly is probably going to get too onerous to keep up with it. So general rule of thumb is that we do it in quarters. So we would do 4 quarters, as you can see on this one, it says January to March. So there's 4 quarters in a year. The next one is April to June. Then we have July to September, and then we have October to December. So the 4 quarters in the year. Then we're going to report our total GST on our sales, which is at 1A. And then we're going to report G11, which is our total expenses, and 1B is the total GST on the expenses. Now, as I mentioned in our previous session on cloud accounting software, if we've got MYOB, Xero or QuickBooks or one of those type of softwares to set up correctly, and we're doing our bookkeeping and record keeping on one of those programs, then generally we can generate these figures and they can go directly into a BAS from the software and also port directly to the tax department without too much hassle these days. But if you're not, again, if you're not savvy in this area, then please get an accountant or a bookkeeper to help you with this stuff. So income taxes, 98% of businesses in Australia are considered micro or small business with turnovers of less than $10 million and fewer than 15 employees. So as I mentioned earlier, for most of us, we're only going to worry about GST, income tax, and maybe some of bigger businesses may worry about payroll tax, but again, that's a conversation for another time. And they're the sort of 3 major ones that a business would be concerned with. So there's only 4 types of entities in Australia that pay income taxes, and that is a person, human being, a company, a trust, and a superannuation fund. But for the purpose of this session, I'm only going to be talking about a person or a company as a taxpayer and how this applies. So if you've set your business up as a sole trader, then you're going to be paying tax on the net profit that you earn in your business and individual income tax rates. So the tax rates, as you can see from this table on the screen, in Australia for individuals is calculated on a marginal scale. So it's not a flat rate of tax. And as you can see, it starts at 0% for people who earn less than $18,200, and it goes right up to 45% for individuals who earn $180,000 or more. Now, this does not mean that you pay the full 45% on that 180. It means that it's a scale. So you don't pay $81,000 on $180,000 income. So the first $18,200 is 0. The difference between $18,201, as we can see there, and $37,000, we're looking at current years of 18, 19, and 20 to 21. I put this on the screen because the rates are changing over time and in the future. Then you're going to pay between the 18 and the 37, you're going to pay 19%. And then the next scale up, you're going to pay 32.5% on the difference between 37,000 and 90. And it keeps adding one to another as you go up and earn income. So it's a rolling scale, and that's how these taxes work in Australia. They're called marginal rates of tax, not flat rates of tax. Company tax rates. If you've set your business up as a company or what we call a proprietary limited company, then you're most likely going to pay a mix of taxes on individual and company rates. And as I mentioned in a previous session on setting up your business entity, there are many obligations as a director of a company, and you must declare some of the profit yourself as an individual so as not to breach the tax avoidance laws that are in force. So unlike individuals, companies do not pay tax on an increasing percentage scale. They have one fixed rate. So this means that no matter whether your company has made $1 or $1 million in profit, it will still pay the same rate of tax. And as you may be aware, taxes in this country are very politically driven. So governments use so-called tax reduction promises and strategies to try and get into power around election times. So this is why tax rates can vary from one financial year to the next. As we can see again on this scale, there's future predicted tax reduction on company rates there. So looking at the current financial year we're in, which is 2021, the flat rate of company tax for companies with a turnover of less than $50 million is 25%. So if your company has a net profit of $100,000, then your company is going to pay a flat rate of $25,000 in income tax. If you actually go back and look at the individual tax rates and do the math calculation, it will actually work out to be more than this. So it makes sense to have a company for legitimate tax reduction purposes if that's one of your goals. So we understand our obligations. We know we have to calculate our GST. We know we've got to report to the tax department in the form of a BAS. But how do we calculate and report income taxes? As we've seen, this is not as easy as the 10% rate of GST rule. Income taxes are something that needs to be planned for in advance based on our future earnings, as I went through in the earlier session on cash flow management, and we need to factor it in to our business budgeting. But you might say, I don't know how much I'm going to earn in the future. And if you were just starting out, then it's probably even harder. I understand. Yep, I get it. But if we understand how the ATO view paying taxes in advance, then this will help us to better plan ahead. The tax department introduced at the same time as GST a system to have taxpayer pay income taxes in advance or as they go. Hence the name pay-as-you-go or the PAYG payment system. Now, to make it even more complicated, there are different forms of PAYG taxes, namely PAYG withholding and PAYG instalments. And the first image here on the screen, if you can see that there, is how we report PAYG. This is on a BAS statement. So when I showed you in the earlier screen, there was an example of an orange BAS statement. That was the front of it. And these things here are actually on the back of it. But this PAYG tax withheld here is relating to staff that we employ. It's employee wages that we pay in our business and that we also might pay super and work cover for. If we don't have staff, then this generally won't apply to us. The second image here is how we report PAYG instalments for our company, which relates to the business income that we earn. Now, it's important also to note that in the first year of business, whether as a sole trader or a company, you will not be automatically put into the PAYG system. That means you won't be paying taxes towards future obligations. What happens is you must first lodge an income tax return that contains business income. And then you will be put into the system by the tax department, and the ATO will calculate a figure that they think you should be paying based on your previous year's earnings. So in year one, if that's where you're at currently, my suggestion is that you save money in a separate account for income taxes so that you have no nasty surprises at the end of the financial year, and please don't spend all you have. What that figure is will depend on the budget you've created and your calculations based on the tax rates that we just went through and your estimated profit. So it is a good idea to be looking at your profit and loss quarterly and to determine what you should be saving every 3 months for taxes. And once again, you know, my last tip for this session is please seek professional help. Again, the Australian taxation system is one of the most complex in the world. The only reason I know all this stuff is because I have a bachelor's degree and I've practiced tax accounting for 14 years. It's not an easy system, and I've seen many people, many business owners get this wrong and get into great amounts of debt. But only because they either did not get help, they did not trust the help they had, or they did get bad advice from an accountant or bookkeeper. So find someone you like, find someone that talks your language. Don't try to do this stuff yourself if you really struggle to understand it. It's certainly worth investing some time and money in a professional who knows what you don't and is genuinely willing to help you in your business. So thanks so much for listening and watching today. I'd love to connect with you on LinkedIn and Facebook. Send me an email and I'll see you in the next session.